The world looks very different than it did a few short months ago when the coronavirus began to spread. The human toll has been staggering. We've also seen businesses start to close or cut back, pitching millions out of work. We've seen a market rout turn the bull into a bear, treasuries at record lows, central banks rushing to provide liquidity, and governments scrambling to provide stimulus too. The divisions of S&P Global have been deploying all of our teams to extensively report on and analyze the impact of this on the economy, industries, and companies. What are the consequences? Where are the risks? And where, through this darkness, are there any shimmers of light?
This is a snapshot of our current global growth forecast. These have already been lowered a couple of times. We see global growth as barely positive now in 2020. We've got a recession in the U.S. with -1.3 growth, -2 in Europe, 3 for China. You can look down the chart. These are just the annual numbers for 2019, 2020, and 2021. As I noted earlier, that quarterly forecast is going to be key.
Chris, tell us what you're seeing from the Panjiva perspective.
What we're seeing is effectively a significant downturn in shipments from China. This is U.S. seaborne imports. They've dropped by over a third in March, first 3 weeks of March. And if you want to get a sense of what a locked down economy's exports end up looking like, this is a potential example of that.
Naturally, the kind of shocks that Paul and Chris have just described have fueled concerns about credit quality, and that's why it's useful to take a look at certain indicators that are coming out from the loan market. Rochelle, tell us what you're seeing.
This presentation will review how industries within the leveraged finance markets, as measured by leveraged loans, began to feel the pain as COVID-19 ceased being viewed as a China problem and became a worldwide pandemic. As noted, only the most defensive sectors such as utilities and cable and satellite television kept losses below double digits. Oil and gas losing a staggering 32%, far surpassed losses of 12% seen during the December 2015 oil price rout, and indeed any period during the financial crisis.
Why don't we hear what the survey found? Liam, can you take us through that, please?
But the big takeaways from the survey are that, businesses do expect major disruptions will happen after a time, and that this situation could have lasting impacts on the way they operate and the way they work. But overall, they feel equipped to, from an IT system standpoint, to handle the additional strain that's coming with the situation. So we'll be tracking these attitudes over time as they change, and I'm definitely excited to share how they evolve. So thanks very much.
And the top 3 industries that are under most pressure, again, no surprise, it's very similar to what we're seeing in the U.S. labor market data. Accommodation and food services down very steeply indeed. Retail and wholesale trade, and then also construction. But construction, of course, is affected by the inability of migrant workers to get to their place of work after Lunar New Year.
Coronavirus has had some impact on strategic plans as well. So, very early on, again, in fact, it feels like a lifetime ago that we did the survey, and it was done less than 30 days ago. Hiring staff, rolling out new products, software and hardware refreshes. We see all of those kind of on the decline.
We expect the wider metal space to rebound as demand activities delayed by the pandemic resumes after hitting the peak.